First, discuss ICICI Bank and HDFC Bank. They're going to be top on everyone's radar. And we've got Dnyanada Vaidya joining in from Axis Securities to discuss exactly that. Dnyanada, we all know the good. Thank you firstly for your time today, morning. But is there reason to believe that the stocks won't have further upside from these levels? Or do you think these are picture-perfect numbers in the current economic scenario?
Hi, good morning. No, absolute strong set of numbers beat across all parameters. So we do see some more upside. The commentary from both these banks have been pretty encouraging, especially from HDFC Bank now with talks around credit growth picking up from FY26 onwards. It should, what we believe is it should now mirror systemic growth. So we continue to remain positive on both these banks. Yeah.
Right. Good morning. Shailos joining in the conversation. And like you mentioned that you expect things to be positive for both of these banks. But if you look at the unsecured loan segment, do you think that would be a cause of concern? No doubt that there is demand in that particular segment when you talk about the banks.
Right. So ICICI has been cautious in their lending approach. However, commentary around unsecured lending and also signals of stress now peaking out are slightly visible. So we should expect that stress to stabilize at least in the next couple of quarters, and we could see growth picking up in the unsecured segment from the second half of FY26. Yeah.
All right, then, and with the recent rate cut, help us understand that how do you see the rate cuts impacting the NIMs of both of these banks going ahead? And along with that, since we have seen strong set of numbers from both of these banking majors, do you believe that there's a case for maybe a re-rating for Axis Bank and Kotak Mahindra Bank, some of these heavyweights which could bode well in the times ahead?
Yeah, so Q4 was surprising with, so we expected some limited impact of the rate cut in the fourth quarter. However, that was not visible as some of the impact from the CRR cut that happened in the December MPC was visible in this quarter. Now, with the rate, couple of rate cuts, now 50 basis points rate cut cumulatively, we expect that the first quarter will see the full impact of the repo rate cut with the EBLR loans being repriced downwards, while the cost of funds will follow, but though it will be with a slight lag. So margin compression in the near term is imminent for both HDFC and ICICI. While I will not be able to comment on Axis Bank, Kotak, we remain positive on the bank. Now with the embargo being lifted, we see that the bank will pursue growth in the unsecured segments. So that should help support margins for the bank even in a rate cut scenario. Yeah.
Right. So Dnyanada, are you reworking your price targets for both, given that both stocks are already at 52-week highs?
Yeah, so we've continued to maintain our buy recommendation on the stock, and we have a target price of 2250 on HDFC Bank. Outlook remains positive. Also for ICICI Bank, we have a revised target price of 1650.
All right, on that note, thank you so much, Dnyanada, for joining us this morning to talk about ICICI Bank, HDFC Bank earnings. Yes, both of these banks have fared well, and that means that there is going to be revision in the target price, where most of them have actually gone ahead and revised their targets as well. Thank you so much for joining us this morning. We also